Could y'all hear me okay? Let me know in the chat. Yeah, let me know if y'all could hear me in the chat real quick, just so I can make sure. All right, so all right, so as always, right, we got to check out the economic calendar, see what's happening. So we have CPI. We have 2 days where Powell's going to speak, and today we have no news. So that could mean that there's not much that could happen. That could mean, price could just do nothing and just wait till the other news events come out. I'm pretty much assuming that it's most likely going to save any type of meaningful price delivery until at least Powell speaks. Right, that's the Fed chair of the United States. And then, of course, we got Yellen speaking too. So it's going to be a very reckless week. So just keep that in mind. On weeks like this, just as, FOMC or NFP or anything like that, CPI is in that list of news events that we have to look out for and make sure that we're catering our risk management and our views and expectations around the volatility that comes from things like CPI, from things like NFP, FOMC, so on and so forth. CPI out of those generally is a one-sided event. NFP and FOMC a lot of times are two-stage events, meaning like right when the event comes out, it'll fake out to one way aggressively, make you think that it's going that way, and then it'll turn around anywhere from 15 to 30 minutes after. So you should test that theory as well. Go back test and test that theory, because it's very consistent. And CPI, like I said, is one-sided for the most part. So whatever side CPI chooses to go to, generally that's going to be very extended. Sometimes it comes all the way back just to stop people out from that initial move. But generally, CPI's characteristics are one-sided. So keep in mind, when we go into every week, we want to make sure that we are considering the weekly range, right? So if we're looking at the S&P here, right? Obviously, we got to look for the new week opening gaps. So we label out this new week opening gap. That also gives us an idea of where Sunday's open price is at. We got to remember that Sunday and Monday trading generally tries to attack Friday's high or Friday's low, because that's the most near-term liquidity for the most part. So in this case, you could see that the Friday's high is being attacked. So there's liquidity up there. So I mentioned to my private community that we're most likely going to give ourselves a retracement if it is going to continue being bullish. We're going to analyze deeper in terms of the overall context of the narrative that we're inside of. But yeah, just keeping that in mind, when we think about the weekly power 3 or the weekly range, because that's generally going to give us a really good insight. We always got to remember that Friday's high and Friday's low are going to be significant for Sunday, Monday going into Tuesday, because that could easily position smart money with the opposing liquidity. So in this case, they may run the highs here, and then maybe we see a drop lower because there's liquidity down here, pretty ideal liquidity. And if price runs up here, takes this Friday's high, then seeks Friday's low, coming into this fair value gap that I have labeled, it wouldn't be surprising to see price go higher from there if everything is going to stick to the bullish overall narrative. But just because the narrative is bullish, there's always going to be some form of a retracement. And being able to navigate that retracement or that manipulation is extremely key, right? And in this case, we could kind of visually see, like I said, Sunday, Monday, going into Tuesday, generally we'll use the Friday's high and Friday's low, or one of them. It doesn't have to sweep both, but for the most part, it'll sweep at least one of them. In this case, if we're bullish, it would be very, very logical for them to drop lower here, sweep out these equal lows to set the low of the week on Tuesday or Wednesday, whenever it decides to do that. And then we could potentially see price dramatically continue its race higher. Because it's CPI this week, just as FOMC, NFP protocols go, we always got to come into the week not holding on to some hardline bias. And unfortunately, that's just the reality of things. But it goes back to what I was talking about in one of my previous live sessions. It comes back to the topic of situational awareness, right? You have to be able to understand the conditions so you can understand when you should trust, pushing your model versus, being heavily managed with your risk in terms of, putting limitations and things on your trading. It's one of those things it's a boring topic for the most part for most people. But then again, it's pretty exciting when you're able to navigate and understand the conditions, because then that leads to you being able to trust things and not being swayed too much back and forth, right? So yeah, the new week opening gaps here. It marks off Sunday's open. We drag that out. Below Sunday's open, if we're bullish, is going to be where the best buys are going to come from, or the most ideal buys because of Power 3 dynamics. And again, if you guys aren't fully familiar with Power 3 or just want some more insights on that, I do have a video or a series touching on Power 3, so definitely go check that out. It's in a little playlist for you guys, so check that out. And yeah, right, so let's go back a little bit and begin our process in terms of validating a particular narrative, right? So as we've talked about in terms of the bonds and yields, these have a heavy impact across the board, regardless of what asset you choose to trade within the U.S. markets. Okay, so if the yields are dropping, we want to see the bonds rallying, because that's the reverse correlation effect, and that leads to bearish DXY and bullish indices. Okay, so we have equal lows down here. I'm pretty confident that we are going to see this continue to call for lower prices. We've been on side with this entire, the last couple of weeks, assuming the bearishness, and then trying to put that into perspective with the analysis with the DXY and the S&P. The DXY obviously has been heavily manipulated, so it rallied up, somewhat through that process. But, sometimes that happens and you just got to be cautious, right? We also have switched over into the new quarter, right? So we're now in quarter 3. June 16th was when we switched, so it's been a couple weeks since the switch. And starting in that, price gave it a little manipulation, and now it's kicked right back into what it was originally doing in June, right? So going into July, we see bearish yields, bullish bonds, right? That leads to bearish DXY, bullish indices. In the last call, we talked a little bit about, or pointed to a little bit about seasonality. Seasonality for the indices is bullish for the indices and bearish for the DXY, and bullish, ironically, for the bonds. Okay, so we have a lot of fundamental things lining up right now, and if everything stays intact, then we should be good to continue pumping out continued interest to the buy side for indices and bearishness for the DXY. Okay, so we can see the DXY is falling in line with that. If we unhide our little levels, we can now begin to see what has occurred. Throughout this run here, we were calling in my private community for a market maker buy model. That worked pretty well, moving up into obviously this area, which basically gave us a shift in market structure here, and now it created a bearish breaker. Right, so this may in fact turn into a market maker sell model to get us down below these lows here. That is in alignment with the yields reaching down to this fair value gap, as we pointed out. Right, so I'm ideally looking to see that continue, and if nothing changes in regards to that, then nothing changes also for our interest in bullish indices. So yeah. So we got the target down here. We have equal lows as well as the weekly fair value gap. This is a monthly low, previous monthly low. So that's ideal, right? If we are going to see price go lower. But again, I said right at the start of this call that it is not unreasonable for them to now want to retrace, possibly get us below the Sunday's open, go ahead and seek these equal lows potentially, and then potentially these as well. There's also a fair value gap down here that's pretty nice looking. So yeah, right. Looking at this time frame on the 2-day for the DXY, we can kind of see how, obviously we could see how the market maker buy model I just mentioned and have been mentioning has failed, right? So we see the 2-day fair value gap in here. So again, like I said, if we do get that retracement, it's pretty logical. That doesn't change the fact that it seems like we're now bearish, aggressively looking bearish, with a clear indication or clear target down here for terminus in terms of the bias being bearish or narrative being bearish. Bias, again, could switch day to day. If it is bearish, there's going to be bullish moves. What can you justify to trade that? Well, if we do see evidence that price does want to rally up and give us a retracement, like I'm saying, and then maybe we see this also retrace a little bit, we can then target the fair value gap up here and the breaker, right? I don't have a bullish sentiment or bullish bias for the DXY unless the midpoint of this breaker is violated and closed above. So that's my invalidation level for sells in the DXY. Okay, so got that out of the way, right? And then the target's obviously long for like the next couple of weeks, in my opinion, is going to potentially be these lows here. What can we target as price continues to drop lower on its way to that potential terminus, if that is in fact going to be the target? Well, we got this low here. If we go to the daily chart, we could find a couple more daily lows. We have this big wick in the midpoint of that. We also can verify that this is going to most likely continue to sell because the midpoint of this order block is now closed below as well, right? So we'll kind of see what could potentially occur here. We do see this as a possible issue as well, potentially. But unless that's totally proven, this is a breaker. Excuse me, hold on. But yeah, we see this as a possible breaker. So we got to see how that delivery is going to behave. Again, my invalidation for bearishness, given what we're seeing here, given what the yields are doing, given the fact that the bonds are also supporting bullish indices, bearish DXY, I'd have to see pretty strong evidence that things are, going to change and not continue. Another thing that kind of justifies bullish indices is the fact that this bullish run on the currencies, which we were also ahead of and we're calling for, has also continued to be in effect. So again, until something changes, nothing changes, right? And in this case, we're going to stay bullish on the indices given this overall view of things, and also given some of the deep fundamental analysis that I've done with my private community, which is justifying potential bullish continuations of the indices and bearish DXY. Okay. So yeah, and if we look at this, we got equal highs up here above the GU highs, right? So we're also breaking through this midpoint of this wick, so that's pretty significant in my mind. So yeah, if we could just continue to see this again, I talked about a retracement that could potentially happen because of just the power 3 dynamics and just how weekly ranges deliver. They don't just go one-sided. Each day of the week has particular characteristics, right? And they have specific roles within the weekly range. So understanding and being able to know how to navigate that stuff and have an anticipation for particular things to occur on specific days, it puts you in a very, very, very good position to then get in line with the market and like feel what the market's going to do versus what it's not going to do, and whether you're right, or wrong, right? So those are some of my thoughts, okay, in terms of what we see here. Again, we have no news. When we have no news, a rule that you guys can note is when there's 0 news events, you have to wait, no questions asked, before, or you have to wait for the open of the New York session, the AM session at a minimum, right? And if things are sloppy or choppy till then, if you can't find anything around like 6:50, then you have to wait, right, for the silver bullet time window, because there's no news, right? So you need manipulation. So when does a manipulation happen? Well, there's a schedule for that, right? So you just wait till the news event comes out, and then or you wait till 7 o'clock comes out because there's no news event, or 6:50. And anyways, regardless of what the situation is, you should be walking forward looking at macros to trade in. Okay, I have a challenge for all of you guys that are here. Obviously, it's to utilize for entry only macros. Okay, if you do this, it'll, for one, force you to not overtrade because you're going to be trading in the macro, and you can only trade when a macro comes and if things line up with your model. But it's also very helpful in terms of scheduling, in terms of when something should occur, when meaningful price delivery should take place, right? So walking forward, attempt to force that discipline on yourself and just see how it goes, right? See how it goes. Right, so if you guys have gotten value so far or get value from the content I post, I'd really appreciate it if you like, comment any of your questions, and consider subscribing to the channel so you don't miss any of these live calls. I really appreciate all your guys' support and all of you guys that come here consistently, so thank you. Tremendous appreciation for you guys. But yeah, so that's kind of in a nutshell what we're looking at. Not much to amplify from there. What we could do until the 6:30 open, because that's when we're gonna pretty much really look to see some opportunities. Maybe you guys could throw some questions in the chat and we could discuss some topics that you have some difficulties with, at least until the 6:30 open. I'm in California, by the way, so it's Pacific Standard Time. So 6:30 for me. What is that? 9:30 Eastern is what we're looking for, right, for New York Open. But yeah. See, again, like I said, something I really want to drive home in this call. I mention it all the time, especially in my private community, in terms of the weekly range and how important that is. Friday's high, in terms of navigation of liquidity for the first couple days of the week. Friday's high and Friday's low, they're very, very important because that's where the most near-term liquidity is at, right? Before it gets to any other objective, generally, if we're inside of the Friday's range, like we were here, generally one of the first liquidity pools that's going to be engaged or utilized is going to be the Friday's high or Friday's low. In this case, we're reaching into that Friday's high, right? Then if we go to Let's drag this up here. So if we go to this, we can see how got a daily fair value gap here, at least for the time being. The fair value gap that has been fully created so far is this one here. So we can't lose sight of that. You see how last week, or the past couple of weeks, we basically were transitioning into the new quarter. So look what happened the first week or two after the like switch in terms of contract months as well as the quarter, right? Just look at the shift, what it did to price. So this is another one of those things you want to know in your journal. When we have a switch over, or a rollover they call it, from one contract month to another, or from one quarter to another, expect this. And I mentioned this, I can't remember if I mentioned this on a live call with you guys. I definitely mentioned it in the private community. I believe I did mention it here on YouTube as well, if I'm not mistaken. But yeah, note that. It's very important, because if you don't understand the battlefield you're looking to fight a war in, you're pretty much going to get slaughtered every time you step foot, right? So you got to look at it like that, right? Every element to your plan, every element to you as the trader, you're basically preparing yourself to go to war, financial war, right? And only the strong survive, right? So you can see how I have a 3-day order block mapped out as well. So that's, in my opinion, it could, play a role. Whoops. So definitely have these levels marked off. Again, I prefer to see price come off these highs, retrace down before it wants to go up. Something like this, right? Like if it could just retrace, because the best buys are going to come from Sunday's open, right? Right below that, at or below Sunday's open, is where the best buys come from. So if we're going to apply that and understand power 3 and trust that that is in fact how the market works, then, and given Sunday, Monday, going into Tuesday's characteristics within the weekly range, that's a very logical thing. While most people will be trying to pick a top, thinking that price is going to reverse because, they're wanting to see things be perfect and pick tops and bottoms, those people will get victimized by people like us that understand this, that apply this perspective. All right. So yeah, we could see how there was SMT here as well. I pointed this out too in my private community. That SMT also was present at the lows here from last week, and we could see how the delivery has pretty much been pretty beautiful, right? So yeah, let's kind of go through everything again. So yeah, we see how the DXY is continuing the sentiment I laid out in terms of DXY falling. Again, I wouldn't be surprised if they use Friday's low, because that's what this is. I wouldn't be surprised if they use Friday's low, get up above that, retrace, and then possibly come into the order block we showed earlier. And if it gets real excited, we have a breaker as well right above us from that daily chart. I believe it's from the daily chart. Let's double check. Yeah. Yeah, so does everything that I have said make sense to you guys? Let me know in the chat just to make sure. If not, or if I'm like explaining stuff and it doesn't make sense to you guys, please don't hesitate to ask questions, right? And don't be embarrassed if you feel like the question is very basic, because I have no problem giving the boot to people that want to be ignorant and, try to talk down to anybody, because, those people that talk down to people don't even prove anything anyway. So yeah. So again, we do have this breaker here. But again, I don't want to see this hold. Further amplification to trust or continue the validity of our potential bearish sentiment, which we've come to grips with, would be the midpoint of this breaker candle getting closed below. Right? We can see this is pretty beautiful here. Price came all the way back. If it would have came back to this and declined, that'd be technically a immediate rebalance signature, which is a very impactful continuation signature in price. Basically meaning that the next candle, like this candle, coming all the way back and then giving a wick like this and then continuing to drop, generally that leads to a fast-paced, heavy-handed directional signal, right? So yeah, so far, like I said, Friday's high has been pretty impactful across the board, right? So Friday's high has been used. Let's just label that real fast. Again, just to reiterate, if some of you guys missed it, when there is no news like we have today, you have to control yourself. When we have news events like we have this week and have had the last couple weeks with FOMC, NFP, CPI, so on and so forth, or rate announcements or Fed speeches, you have to control yourself. Because days before those news events come out, they are priming you. They are priming the community of traders to victimize them. And the way that we can get in line with that, obviously, is to do, to have a heavy patience and, instill this in our rules, be prepared for that and understand what the expectation should be, which is, you go into price delivery ahead of these news events with a supposed or assumed bias, right? Our assumed bias is bullish. But then you got to remember that there could be manipulation before that. There's priming that occurs. There's consolidation that builds sentiment. So you don't want to, become a victim by being impulsive and needing to take a trade right now, because there's nothing to trade right now, right? With any, with any type of background validation, because we're looking for high probability, right? We're not just looking for any willy-nilly, trade idea. The whole process that I do every time I get on live, whether it's here or with my private community, it's all to build clarity and build back-end information so we can go in and be confident and take the trades. And for the most part, those of you that have been here for a while know that we're generally on the right side, right? So this is a step that's very much needed. And again, it's one of those things that people think is boring. But what's also boring is doing something you hate for the rest of your life because you couldn't just do what you need to do, right? And be disciplined and follow the rules and understand how this industry works, right? So yeah, let's drop down and kind of give an observation for this. So remember what I said, there's these equal lows here. I would prefer to see price drop lower. This run up above here, sweeping the Friday's high, if we do end up seeing that retracement to then try to push price higher, something that you should consider is the fact that, if price is going higher and we want to see it go lower on the higher time frame to then kick back into the narrative, when you see something like this, consolidation, and then a reasonable level of liquidity or a PD array above price, but you're expecting it to go lower, this could be a market maker sell model to get us down below here, right? Could be a market maker sell model, right? Consolidation is this is where the original consolidation would be, right? First stage accumulation, could be a second stage accumulation into a smart money reversal possibly, to then use this as a target near term, right? But that's all within, obviously, the bullish narrative. But again, things don't go one-sided all the time. They have different things that they utilize in terms of price delivery to set up those larger range moves or those larger time frame moves, which is what all of your lower time frame entries should have on the back end. Not only should they have the layered structure in terms of validation, invalidation based on 3 PD arrays, but also the other assets we've observed and continue to observe. But you also, you want to make sure that you have an understanding of the manipulation, right? You want to make sure that you understand that if we are looking to go higher on the higher time frame, and we do have those things layered behind us favoring one particular side, we want to understand on the lower time frame how it works to set up those types of moves. And a lot of times things like lower time frame market maker sell models in a higher time frame bearish retracement to then go bullish a lot of times occurs. Okay? So a lot of times that is the case, right? So going from like the higher time frame narrative, right, being bullish, if we're looking for a retracement to then, seek bullishness again, it's very reasonable and happens all the time where we see market maker sell models push down into that discount array to then kick back in line with the overall bullish bias. Does that make sense, you guys? I hope that made sense. Because that's a very, very huge step forward from higher time frame analysis to lower time frame navigation within a narrative on the higher time frame. Whoops. Hey, let me know in the chat if all this stuff has made sense so far. So again, like you look at this time frame here, even this time frame, right? If you see price run above these highs and then quickly break off the high, sweeping again Friday's high. All right, for sure, Jones. Appreciate you hopping on as always, brother. Greatly appreciate your support. I hope you've been getting a lot of value from these calls. Again, if you guys ever have any questions, or if I'm explaining something and you're getting lost, do not hesitate to step in front and leave a comment, right? Say, hey, slow down, and can you go back and talk about this? Because, it's really, really rough if you have questions and someone's just fire hosing information at you. So I want to try to prevent that. SMT with ES and NQ. Yep, definitely. But we don't know if that's going to continue to hold. So we'd have to see what's going to occur. But near term currently, crazy like a fox. What a name. But I like your name, bro. But yeah, near term we do have that SMT. So if that does hold, then that just justifies what I've been talking about so far, right? That would justify this market maker sell model to reach down into the fair value gap below price, below these lows here, which again is in line with this is in line with Sunday's low and Friday's lows down here as well, right? So that market maker sell model could set up for that little fractal in price right there that we're looking at here. But then if you move up, say to the 1 hour, this consolidation could end up being a market maker sell model on this time frame, right? So you can kind of hopefully you can visually see start to visually see the fractal nature and price. There could be a market maker sell model here on the 1 or 5 minute time frame to get us below the lows here, but that little retracement there, or market maker sell model there, could be setting up price with a larger smart money reversal to get us down below Friday's low, right? This deeper sell side liquidity pool inside the narrative of this higher time frame viewpoint, right? So all of that would work into the fair value gap that we have outlined here on this daily chart, which then would be reasonable discount to try to see price continue to kick back in line with the bullish idea based on our deep breakdown of intermarket relationships, and like I said, in my private community and a little bit on here, it's also being justified by fundamental analysis, that being COT, seasonality, and of course the interest rate analysis. Right? So yeah, I am very much interested in seeing what happens as we approach, or as we sweep through the buy side liquidity here. Again, we do not pick tops, so just because it would come off the highs here, if it does do that, doesn't mean you look automatically to get into a trade. You have to wait. You have to, for one, wait for your model, right? And then you also want to make sure that, make sure that you're watching how the delivery is occurring, right? Like if we go to the 5 minute, right? It'd be nice to break down below this swing low, because then that would be a 5 minute shift in market structure after running highs. And then like Crazy Like a Fox said earlier, there's SMT at the highs. Whether that holds or continues to hold, obviously we're gonna have to just wait and see. If it does hold, then that could be reasonable to utilize as a backup or a further confluence to then see price reach down for the lower narrative or the lower bias that we've kind of been looking to navigate, right? So yeah, and then if price just continues to ramp higher, guess what? I personally am not interested, because I want to see logical levels of liquidity getting attacked before I look to kick back in, because this is raging higher. What are people doing? People are looking to buy. So do you want to be in that pool of what everybody else is doing? Or would you rather look to see them get victimized, then kick back in line, because that's how smart money operates, right? So the choice is yours. And everything that we have broke down today, the whole process that we've broken down today, is thinking like, how we're supposed to think. You could say like smart money, like ICT, like, whatever you want to categorize it as, but this is just how the market works, right? And how it victimizes and manipulates to particular liquidity pools using specific pools of liquidity, like Friday's high and Friday's low, or London's high and London's low, or previous day's high and previous day's low, right? And then also how that all works and fits inside of the Power 3 picture from not only the weekly range, but then inside each daily range that creates that weekly range. And for more on weekly ranges and daily ranges, I actually have a video or a series, like I said, about Power 3, and it goes into great detail about those particular topics. So definitely go check that out. And of course, if you have any questions, I am more than happy to help you guys. So yeah, we are continuing to see the S&P still get up above these highs. So speaking on SMT, we had a conversation about this the other day too in one of the live sessions. But when there's SMT, right, if you're looking to, say, sell in this case, assuming that the SMT is going to deliver price lower, the sell idea between the correlated assets that you would prefer to favor is the one that makes the failure swing higher, because that is showing it doesn't have strength to get up there. So if you're looking to sell, what are you looking for? You're looking for weakness. So selling the S&P versus the NASDAQ, if we get that SMT and the NASDAQ makes that lower high, selling the S&P could work out, but it could be the slower, lethargic option between the three, or between the two. In this case, I don't trade the Dow. Right? So that could, that's probably something you've dealt with before. You probably entered in the NASDAQ and the S&P ran off like a madman, and you're wondering why the hell the NASDAQ isn't moving. Well, if there was SMT and the NASDAQ was the one that, created the failure swing lower, if it was bullish, or created like a run on stops versus the S&P that maybe made a higher low in a bullish scenario, then obviously that would be part of the reason why the NASDAQ was lethargic, right? And why the S&P was the one that went faster, right? Just to really drive this home, right? If the S&P did this, or if the S&P did this, but the NASDAQ did this, that shows weakness. And if you're looking to buy. And then vice versa, if we're looking to sell, the one that has the better sell would be the one that makes the failure swing higher. Right? It looks like NASDAQ is going to potentially deliver that. But again, we don't pick tops. Part of my rules is I don't like to sell very obvious equal highs, and I don't like to buy really obvious equal lows that have been left. Because again, like I said earlier, what am I waiting for to be able to get in line with a possible buy? Or what am I waiting for to see that possibly continue? I want to see us break down below logical levels of liquidity first to engage liquidity. Whenever you look to find your model, look for liquidity to be engaged first. Obvious liquidity. Okay? Because the biggest moves, as ICT has mentioned many times, it's probably went over a lot of people's heads, is the largest range moves occur after a pool of liquidity is taken. And go look back, even on a smaller time frame perspective, right? When the big moves happen, most times there's going to be a run on stops, right? When a big move happens, most likely there's a run on stops, right? To either direction, right? So yeah, I hope that's pretty clear. So yeah. What the hell is my fair value gap? Oh, right there. All right, so yeah, this is, everything we've discussed so far is pretty much my whole view. Are you guys clear on what it is that I'm trying to look for? Just so I can know that we're all on the same page. And if you have any other differing views and whatnot, you can also share those if you'd like in the chat, and we could have a discussion about it. We have 30 minutes until the open price for the New York AM session. So right now we're just waiting to see. Remember what I said about this breaker candle? If the midpoint gets closed below, right, that's further justification that we're most likely to seek this monthly low here. On its way to that, like I said, there's other liquidity levels to target, because it's probably not going to go from here to there today, right? There's logical levels, those levels being each daily low. If you have this large wick, you could break that wick into quarters, get each quarter point of that wick. Those are also useful targets, and it's a useful way to target. We could see from this high to that low, maybe we can get a fib projection, like a swing projection. Right. A beautifully placed fib projection. Down here. Isn't it ironic how this is right down below that low? So this could be reasonable for the next couple weeks, or depending on how exciting CPI gets. I wouldn't be surprised if when CPI comes that this just accelerates to stop those people out. So yeah, welcome to you guys that have just came in. We have went through a whole lot already in the last 40 minutes. So yeah, the ideal situation that we're looking for those of you that just came in, we're looking for bearish DXY bullish indices, but it's reasonable for us to possibly see a retracement, so you got to keep that in mind. We have Sunday's open price, which is also a new week opening gap, obviously. If price does decline, which is what we want to see if we're going to look to buy longer term for the rest of the week, maybe even going into the next week. If we're looking for that to happen, we want to see a retracement to sweep out liquidity, preferably Friday's low. If we go down to this lower time frame, right, we could see equal lows here. This could be setting up a market maker sell model to get below here, but that could be in a larger market maker sell model using this consolidation here, using this all as a manipulation to go higher, just to go lower. We've taken out Friday's high here. We talked a little bit about Friday's high and Friday's low, the importance of that when you're trading on Sundays and Mondays. Generally, Friday's high and low is something significant. And again, that whole narrative makes, hopefully makes perfect sense to you guys. And, it seems logical to then see price drop down to this fair value gap. But before it gets down to that daily fair value gap, you can see how there's ways to navigate the lower time frame charts within that higher time frame bias, which is also working inside the narrative, which in this case is bullish on the higher time frame, right? So bias changes a lot of times day to day, but narrative doesn't change a lot of times day to day. It changes over a larger sample size of time, right? And again, if you guys get value from the content and you support the work that I do, definitely consider liking and subscribing to the channel. I much appreciate it. It shows that 50% of people that view the content on a regular basis are not subscribed. So I want to make sure that you guys don't miss any of the live sessions or any future videos that I do. If you do get value from this and appreciate the work that I do, because I appreciate you guys as well, and I want y'all to be here, right? So yeah. But yeah, I mean, looking at the bonds here, you can kind of see how there's equal highs. I mean, that's very freaking obvious, right? And we've had that outlined for the last couple of weeks for a draw on liquidity, and it's been, for the most part, running up into there. There was this drop here that had us somewhat questioning because it broke through the fair value gap. But I said last week, when price, if price can really ramp up and break through that and stay above it, it could be used as support, and then we would end up seeing this be just a retracement. We had this all outlined, walked it like a dog. Okay, we weren't swayed. We started getting questionable, or things started getting a little questionable when we got up here. But once it gave us this fractal high and then delivered quickly away, I was pretty confident that we could trust the continued narrative. And then obviously that translated to the GBP USD and Euro USD, which we also called before the fact in the moment, and used it as confirmation. And then we also seen the DXY came into this fair value gap here on the 8 hour, and then just basically declined pretty aggressively, and has been rocking and rolling since. Also shifted market structure. We have this second one here that's a break in market structure, pretty much broke the whole structure. And again, within that idea, we can see the other PD arrays and think of different scenarios that could lead us to continuing to go lower, while also being able to navigate on our way to that, in this case, monthly low, right? We have daily lows, we have these swing points, we have the below the breaker midpoint, right? That's a confirmation. We have this down wick here and the midpoint. If price was to retrace into there, that's not only in line with the 2-day fair value gap, but that's also a PD array in itself. This large down wick, the midpoint of that, acts as a premium array as well. Okay, so just some things to review, because I talk about these things all the time, like the wicks and stuff. And again, if you guys have questions, let me know, and I'll be happy to help you. But yeah, so I think I've covered everything in terms of context and narrative and bias and, different scenarios that we're going to be looking out for. So now all we got to do is wait. Crazy like a fox said, there's SMT at the highs. Let's go see if that's still continuing. Looks like it is continuing. But again, it's very questionable for me to believe that they're going to leave that. I don't think they're going to leave that. The Dow, obviously you can see what it has reached for here, right? We pretty much came and looked to sweep out the liquidity up here. Now, wouldn't be unreasonable, again, if we were to see a retracement on this asset too. This looks so ugly, right? So ugly. Yeah, it's unbelievable how many gaps there are. But yeah, nonetheless, we got those equal highs here. We got what is this? These are kind of relative equal highs, but the more significant PD array here is this fair value gap above these equal highs. So yeah, that's my target right there. For the Dow at least, there's not much to work with on the daily chart. Well, I guess there is on this time frame. Isn't that weird how the daily chart looks like crap, but you go to the 2-day and everything's like supposedly more clean for some reason? It's pretty interesting. But yeah, so with all that being said, we have the fair value gap up there, and on the way to that fair value gap, we have those equal highs. Right. So now the rest is just a waiting game. You know what I mean? Like, there's only so much analysis you can do. Every single topic or idea that we've looked at, they're all impactful. And now that we have a grip on pretty much all the different things, laying out a narrative, then all that's left to do is wait, observe the liquidity manipulation, using particular levels like Friday's high, Friday's low, London's high, London's low, previous day high and lows, and then we just wait going into the 6:30 open, which is obviously part of the rules because there's no news. If there's no news, again, just to reiterate, you have to consider only looking for anything, even possibly significant after the open price, because that's when your manipulation is. Why do we wait for the news? Because there's manipulation. Well, when there's no news, where's your manipulation going to take place? That's reasonable to schedule out. Well, that's going to be at the open price. Right, 5:30 Pacific Standard Time, 5:30 a.m. Pacific Standard Time. That's another open, but that's for the interest rate markets. And then we got the 6:30 a.m. Pacific Standard Time, which is just the normal New York session open. Begins the a.m. session. Okay. 5:50, right? That is a macro time window. So sometimes there could be opportunities that take place. Especially if there's like a 5:30 news event, 5:30 a.m. Pacific Standard Time. If there's a news event at 5:30, then you could reasonably think about the 5:50 the 5:50 macro as a possibility for an idea to take place. But yeah, you just got to be very cautious. You know what I mean? Yo, what's up, Byron, bro? Shout out my freaking brother Byron, yo. Man's been with me since the very beginning. And is a savage, by the way. But yeah, so yeah, we still got that order block. And again, we're waiting for the 6:30 open, so not much more to do. At least until that time comes about. So yeah, we can kind of see how things have now accelerated in the S&P. They've really accelerated to the upside. Again, my bias or narrative overall has not changed and will not change unless our invalidation points are met to the downside. But for me to want to get in line and not chase the herd, I need to see what we discussed today so far. I'd like to see this be a market maker sell model to then get us down below this low, possibly. And then even better if it tries to get down below these lows here, because that's a daily fair value gap. Right? Setting up that daily fair value gap is how we can frame out or time when the large range expansions to the buy side could take place. But again, does that mean you can't trade this going into that fair value gap? No. That is literally a narrative within a narrative. The higher time frame is bullish narrative wise, but day to day, right, or getting to set up that higher time frame narrative, there's also a narrative to get us down into the fair value gap here. So that's how you can begin considering or thinking or imagining how you can walk both sides of the marketplace when you understand how the market uses liquidity and what levels are significant to set up those larger time frame moves, right? Understanding this perspective and how to navigate, like in this case, the narrative within the narrative, right? That gives you a ton of opportunities. And it's just another amplification to the fact that you don't need, for one, you don't need everyday trading, and you don't need 1,000 models. If you have one model that you can navigate with this perspective from both sides, while not losing focus in terms of what the higher time frame narrative is overall, then you'll have a pretty spectacular time as a trader. You never have to worry about any type of, moves not happening or whatever the case may be, because there's always something that you can frame out, right? Because something's going to set up that higher time frame run to the buy side, and price moves from inefficiency to liquidity, right? It goes like this, right? Goes from stops to inefficiency, stops to inefficiency or liquidity, whatever you want to call it, right? And then if it changes, it goes from stops to stops and breaks the, stops to inefficiency, right? Stops to inefficiency. And then if it goes from stops to stops like this and creates like we talked about, like a breaker, then that's, generally a good sign the price is going to change. And then a lot of times, if we're looking at correlated assets, an SMT will form, right? So then one will do like this, right? At the same time. And that's even further amplification that price is likely to change direction. It only does two things when it changes direction, and part of that, and that has to do with SMT, and it also has to do with the structure, right? One will make a failure swing in the correlated assets. Generally, it's at a PD array that this type of thing will happen on the higher time frame. Say it's like a daily order block bearish, or like a daily inefficiency, or like a daily high, or a monthly high or weekly high, right? Maybe it broke above that, and then presented this, right? So just some, I guess, changes in delivery that you can consider, and when price reverses, right? Just some of the logic behind that to consider, right? We could have a whole discussion on that, which we're not going to fully get into today. But if that's something you guys want me to talk about, we could definitely talk about that. Do some back testing drills related to that topic, because I know that sometimes people have a hard time navigating the changes, right? Like when can I trust that price is going to reverse? Or when can I trust that price is going to, only retrace, and then how can I time it to get back in line? Like in this case, if it dropped down, right? How do I time that to get back in line with the bullishness, if that's the bias? Right, so yeah. So yeah, let's really take into consideration how things deliver as we approach these highs, because that's just a bunch of layered buy-side liquidity. Clearly, doesn't look like anything's changed, but also the Dow's been pretty reckless the last couple weeks, couple months, pretty much. But yeah, let's see if this SMT stays intact or not. And obviously, if it doesn't stay intact, then price is more than likely to continue going higher. Right? And again, you don't want to chase the bullet train. Okay? It's one-sided. Like you're trying to like grab something that is moving so quickly. And it is possible, and there's ways to do it. But again, Sunday and Monday is a heavily manipulated little span of time generally. So you got to understand what the manipulation would be. I'm assuming that the manipulation is going to be the fact that they ran price higher and then they're going to drop it lower to seek Friday's low. Eventually. Before it gets to there, at a minimum, I'd like to see price drop from this high and from, the NASDAQ's high to then get us lower down into here. And if it proves that it's going to get down into there or look to aim for that, then we can obviously get in line with that. And today's overall delivery that we look to engage in would be seeking the lows here. Like I said, framing it out as a market maker sell model inside that little bit bigger market maker sell model, which is using this consolidation. But that's also all inside of a possibility for the daily retracement into this daily fair value gap. Right? So that whole little sequence of analysis we just did right there is what the fractal nature and price means. Like that's literally what it means. Right? The lower time frame will have its own story, but that's all working within the other upper time frame, which is all working inside of the higher time frame narrative. Right? And that is one of those topics that needs experience, right? And experience like this, watching somebody that's already familiar with it, just break it down, that's extremely helpful. I know it was helpful for me too, right? So I hope it's been helpful for you guys as well. Yeah. So yeah, let's see what happens. And again, guys, we got 9 viewers and we only got 5 likes, right? Do your boy a favor if you haven't, and like the video if you get value. I really appreciate you guys. And yeah. I'm assuming that today is going to be a little bit less crazy, right? I personally don't think it's asking a lot for price to give us the retracement that I'm looking for. I don't think that's demanding too much in price. I really don't. I really don't think it's asking for too much. And it just makes sense. It's a safer, at least for me, it's a safer view, right? It's a safer narrative rather than being like everybody else and just trying to chase price, right? Like, oh my God, it's running higher, I need to get in line. No, you don't need to get in line, right? The best thing that you can do is wait till it looks to victimize those people, and then knowing everything that we've discussed today puts you in a very, very good position to then, not only ride the actual move for the day if it does choose to do that, but it's also lower risk, right? The higher risk is trying to chase price, right? But of course, this sell would be obviously counter trend. So using the risk management rules, when we're trading counter trend ideas, we drop our risk by half of what our normal risk is, and we only take max 1 to 2 trades a day. And if we take a loss, we lower our risk by half, or at least a quarter of the risk that we put on, until we make it back, right? And if you're trading counter trend, I have some students that, that's a universal rule to take 1 or 2 trades a day. But if things are like NFP or CPI or FOMC weeks, or if we're counter trend trading, or if it just seems like, we've come to the conclusion that it's low probability, then they only take 1 trade and then they stop. and then just observe and try to get a feel for maybe the next day, right? And that's a good way to do things too. And some people may think, oh, that's not enough excitement, right? Like, oh, I'm not taking a lot of trades, and therefore I'm not going to be able to make money. You don't understand how this game is really played, if that's the perspective some have, right? Because more trading doesn't mean more money. It guarantees that there's more risk, guaranteed. And it almost guarantees that a new trader that is not fully equipped is 100% going to over leverage, which then leads you to over risking, and then you totally shatter your rules, and then you're in a constant spiral of, oh, I feel like I can't do this, and oh, this will never work, and so on and so forth. While the professionals are over here being very calculated, very precise, getting in, getting out within 1 to 3 hours, right? Off of logical things like we've discussed today, right? I mean, I hope it makes sense in terms of, why within the higher time frame daily narrative that we painted on that higher time frame. I hope you understand why, also given the power 3 dynamics, why this high being taken and the price rejecting that, why that would be a reasonable conclusion to come to, right? Because again, liquidity is engaged. There's liquidity sitting down here. There's more liquidity down here as well. Right? So if it runs through the high up there and then rejects, that's in line with the power of 3 for the weekly range, because we have to get below the Sunday's open for the best buys, right? But then it's also in line with our assumed narrative that price is retracing to get down to this daily fair value gap. Right? So it all kind of dovetails beautifully together. Right? And it just makes sense, right? And that seems high probability to me, especially if like the yields rally, right? If they, if the yields and bonds promote, they're going to retrace as well, right? That would also kind of justify the assumed retracement, right? So that being, maybe this rallies up a little bit, right? There's probably some, fair value gap in here. Wouldn't be surprising. And that goes hand in hand with the indices possibly giving us a manipulation, right? Opposed to the higher time frame view, which is bullish, to then set up the bullish power 3 for the week, right? So yeah, I hope that makes sense, and you guys are comfortable and understand the dynamics behind that. Blow what? Ain't nobody blowing accounts, Byron. You know this. But yeah, so now we're just waiting. We have 4 minutes. So let's see if we get an aggressive run lower from here. That would be something I'd like to see. So we do see that there's an SMT here between the yields. So we'll see how impactful that will be. We're just going to have to see how much of an impact that's going to have. I believe that there was SMT here as well, yeah. There was SMT at these highs. That's what I used to justify the sell. It was going to continue. So we'll see if, we'll see if this wants to hold. But again, nothing changes my overall narrative until at least 3 PD arrays get broken to the upside in this case, because we're looking for possible downside, logically being these equal lows and the fair value gap. I would have to see 3 PD arrays to the upside get taken to have me consider the fact that things may not continue going lower. That would have to be the midpoint here. It'd have to start using this weekly inversion fair value gap as a inversion level, or like a support level, I mean. And then we'd also I have to say this for value gap taken. And once we get above this high, I would completely cut my sentiment that we would possibly be continuing to go lower. That is when I would start to consider this SMT has changed the state in which price is delivering, at least for that time. If that doesn't happen and we continue to maybe break down below here and use this as resistance, then again, we have a very clear target, very clear narrative, very clear across the board in terms of the other assets, like the currencies are rallying, the DXY is declining, the indices are rallying. So the overall higher time frame narrative, in my opinion, has overwhelming support for bullish indices, bearish DXY, also supported by, like I said, COT, seasonality, and then the interest rates. Right? So all of that justifies and validates and gives us trust and builds clarity in terms of where price is headed and which side we should trust over another. Right? And then you couple that with, again, validation and invalidation. You could keep it as simple as 3 PD arrays, like I mentioned. Right? Where are 3 PD arrays above price that, if they're broken, would disrespect my view in terms of price going lower? Right? That's your potential validation and invalidation. And if none of that gets taken and all the other things we mentioned are in alignment with your bias or narrative, then obviously you have nothing to fear. Even if price goes against you a little bit or decides to have a bullish retracement day inside of a bearish overall price delivery. So yeah, hope that makes sense. And yeah, we have 1 minute, so let's drop down to our 5 minute and begin watching what is going to take place. So yeah, let's see what happens here with the NASDAQ. We have now swept the highs here, so that's kind of interesting. See if this gives us this hard press lower. Which again, it looks like it's going to do. Because then again, that justifies us going lower to then possibly go higher later. That's beautiful, right? These down candles become a bearish breaker. These down candles become a bearish breaker. So let's see if that is going to be of any significance. Again, I prefer to see price attack these lows before it wants to continue going in line with the bullishness. Right? Whether that happens or not, we just have to wait and see. Right? But again, these down candles become a breaker. Right? Very light breaker, but it's a breaker nonetheless. Liquidity has been engaged. One thing I don't like is the fact that DXY is falling at the same time, so that makes it a little bit sketch. Right? Price is retracing. Right? Let's see what occurs. We don't have the SMT anymore, as far as I can see. So things have all taken the highs. But the NASDAQ looks like it's the weaker of the three. So we'll see if that is going to continue. Again, this is counter trend. We just want to see it get down and attack the lows here. And then possibly, if it gets real excited, drop all the way down below Friday's low, potentially. But it may not do that, right? It may just come down into here. It may do this, right? And not even deliver that at all. See, so we've now broke through this breaker, so I'm no longer interested in the sell at this moment, right? Now, if it would have respected that, and then DXY turned around, then we would have had a more valid opportunity to consider looking for price to sell. But right now, there's nothing that you could look to enter. Let me rephrase that. There's nothing I personally would look to enter. Okay? And if it chooses to just not even try to kick back in line, or kick in line with us going down and seeking logical liquidity to the downside to position bullishness, then obviously I'm not one to chase price, and I'm also not one to pick tops. This here technically is picking tops if you just entered because the low broke, right? Because that's not permitted at all, right? We needed to see if this is going to hold price. Then we can consider, whether it's going to seek these lows here or not. So it's a pretty large wick. We do have this order block here. So it, depending on how it delivers from here, right inside this candle's range, from the high to the midpoint, depending on how that delivers, will determine what it's going to do for like at least the next hour or so. Yeah, we'll see what happens. Okay, so there's a run on highs there. So the S&P has bullish S&T, so this right here may be a significant potential area to buy. Right, just study how that fair value gap behaves. DXY is tanking. S&P has bullish S&T. So since it blew past this, that would also no longer be of interest. Now, if this low breaks, we now have another breaker forming. But again, I would like in that case to see DXY do its retracement as well. And so everything it's all cracked in correlation. Two of them are rallying, one's just completely tanking. All right, so yeah, watch this, study this as a breaker here. Study this as a breaker, not only a breaker, but a bearish order block. See how that responds. DXY looks like it may give us a turn. We have equal lows here, equal lows there. So again, remember what I said at the very beginning of the day, right? Well, our whole narrative has been, I want to see it to go lower, to go higher. In this case, if we were looking to reasonably get in line or study, right, hypothetically, this is an order block. This is a fair value gap. This also becomes a bearish breaker, right? We've ran out buy side. We did it once, came down, swept people out that were in that move, came up again, stopped them out, and now it's aggressively turned away. I'm pretty confident that they put this aggression behind this run on stops, or ahead of this run on stops here, because of a particular reason, right? They're looking to victimize these traders that had buy stops above these highs. So imagine if you put a buy stop up here because you're trying to just go with the trend and pick a top, or pick or choose the perspective to just get in anywhere and follow the trend. They got triggered in and then aggressively, painfully took them out, right? Like imagine if you were in there and it just triggered you in and then ripped your hair out, right? Imagine the feeling. That's part of the reason why, part of the logic behind the narrative, or the bias that I've tried to portray the whole morning, watching for price to set this sell side delivery up, right? Because I would like to see run on the highs and then price deliver lower, right? Creating this as a possible market maker sell model to then reach for the daily fair value gap. If that makes sense, then today may be a breeze. See, look, there is a possible entry here if it is going to fall in line with what we're basically looking to try to engage. DXY is rallying too. So yeah, let's see if that holds in price. So let's see how that works out. Let's look at the bonds and yields. Whoops. Yields are looking like they're wanting to rally. All right. The interest rate markets look like they're pulling lower, at least for the time being. So let's see if we can, get a sell-off from that little area I pointed out. Right back to the order block. What invalidates this order block, or this potential sell idea, if price breaks through the midpoint of this, as well as the midpoint of the breaker, and doesn't show any respect, and through this fair value gap. Doesn't look like it's going to, though. So you entered right at the beginning of the fair value gap. If you're using the YouTube model, generally that would be where you would enter. And ideally, you would have to consider this fair value gap as a possibility, because it may reach up into there. But again, we're also trading or looking at this hypothetical idea right at the open price, which is a little more risky, right? Because you could be shaken out. Everything looks like it's in line with the overall narrative or the bias I've been portraying, in terms of the higher time frame narrative being bullish, but us anticipating price running lower to try to seek out reasonable sell side liquidity to then position to possibly get back in line with the possible bullishness, right? So yeah, we'll see if that comes to fruition or not, right? There's a huge Kraken correlation, so obviously high risk. And again, remember the rules for these types of weeks. You always drop your risk. You always limit the hell out of your engagements, and you do not overtrade or over leverage ever. If you want to survive in this industry, you'll never overtrade or over leverage. You may do it sometimes here and there, but just remember, every time you do that, you're extending your learning curve. You're extending the time it's going to take for you to make, for one, the money that you've lost back. And then it's also going to continue to hammer your trust in yourself and your overall confidence. And it's just overly stressful when it doesn't have to be. Because there will be days that you win, there will be days that you lose. There will be days it's crystal clear, there will be days, even weeks, when you'll just feel like you can't get in your groove. And that's just part of being a trader, unfortunately. So yeah, let's see. So again, the rules, if you're following the YouTube model rules, your stop could be literally as high as this fair value gap up there. Whether you're comfortable with that or not, that's, stuff for you to decide, right? So yeah. So we'll see what happens, right? Now this is a run on stops, right? Run on stops here, aggressive run. Now we got a run on stops here. Let's see if that also presents us with a possible expansion to the downside. Right? Or is everything going to kick in line with price continuing to go higher? Again, this cracking correlation that there was, right, this shows that the NASDAQ is either the most manipulated one or it's the weakest one out of the three. So if a buy was to occur, NASDAQ is probably going to be the slower if that is the case. But again, we're mapping out and framing this idea, and we don't want to see the fair value gap here violated. It can reasonably go up into here and tap it. We don't want to see it also get too far above the midpoint. We don't want it to close there, and we also don't want to see it again break through the midpoint of this. And we want to see the respect of this fair value gap at least the midpoint. We do not want to see it break through the midpoint of this fair value gap, because in there, in my opinion, it's not worth staying in the trade. Right? So yeah, keep all these things in mind, right? Keep the considerations I stated about risk management. Although there's no live trade being taken right now, right? The scenario in which we're watching, for it to drop, all of that stuff is a repeatable sequence of events. And then obviously the news events that come out, like CPI that's coming, those are repeatable things as well. So the rules carry over, and they will save you much more than they won't. But you will miss trades, right? You will, again, lose trades, and you will win trades. And sometimes it'll be crystal clear, and sometimes you'll be like confused. But one thing that can remain constant in your trading that you have control over is your rules and whether you follow them, right? And how much money you're willing to allow yourself to lose. And the more confidence that you have, the more context you have, the more clarity, capital letter word, right? That's what we talk about every day, leads you to consistency and profitability, potentially, right? There's no guarantee, obviously, but you put yourself in a much, much better position. So, yeah. So, again, remember what I said? The midpoint, we don't want to see it close above that. We don't want to see it close above the midpoint of this order block, and we really prefer it not to get above the midpoint of this fair value gap here as well. Now, if you label out from this high to that low, this could just be an optimal trade entry, right? And then again, our target could reasonably be at these lows here. It's very logical, right? And if price here, I don't like how it's showing so much resist or support to this fair value gap, and I don't like at the same time that DXY is pulling like it is. Could be a problem. We would like to see price break through this fair value gap with no hesitation. This here is making me question, the longer that it sits here, the lower I feel like the probability is that it's going to take off, at least for this specific time. We're approaching the 650 macro, right? So we'll see if the 650 macro can give us more of an amplification, right? For one side or another. So, and again, it's not building my confidence with how it's moving. It's not building my confidence that this sell would in fact be something that I'm truly trying to hold and be a part of. Again, once it breaks through the midpoint of this, I would close the trade. I do not want to see it break above that, especially with DXY falling, especially with the other indices rallying. right? And then if that was to be the case and an entry was taken there and you got stopped out, or you just closed it because it breaks through those validation points, for one, you're listening to logical reason behind getting out of a trade and you're not hesitating, right? You're protecting your capital, and then you're, saving some mental capital for potentially another opportunity that comes down the road. Right? Instead of risking all of your money on one trade, moving your stop loss, being freaking reckless, trying to demand that the trade goes in your favor when, there's some things that you need to pay attention to that in the moment may not allow for your opportunity to take place. Right? So then you got to wait. And then like we've talked about in some of the other videos, there's continuation variations to every model. So you have no reason to be all upset, no reason to worry about it. No reason to, you see how it's delivering now? The midpoint of this fair value gap has been respected still, so we'll see if that continues, right? But yeah, there's just no reason to worry about missing setups. There's no reason to worry about any of that stuff, right? Because if you're stopped out, just start the process over again. And then if you're stopped out and then it goes in your favor, now you have further context to trust the price is going to continue in your favor. So the continuation variation or conservative entry based on, price giving you a little bit more information becomes more helpful, right? And a lot of students will feel more comfortable with that approach over trying to pick the main entry, right? Some people would trust the conservative entry more. And there's nothing wrong with that. You don't have to be perfect. No one is perfect, right? Like if this entry does take off and breaks through the low, was that perfect? Right? If you enter, if you don't enter this high, but you enter this, are you going to be upset because you didn't get the high? Like if that is ever the case or has ever been the case, I mean, that's just a massive problem. Right? So yeah, just think about that stuff. You know what I mean? So yeah, let's see. Now it's, again, showing things that we do not want to see. Right? We definitely do not want to see it run so aggressively. I mean, it can, right? It can run up and fill in the whole fair value gap. But that's not what we want to see. Right? So in this case, we would have been stopped out. Right? But this is another risk with this type of week, right? It's another risk. Just Monday also is a higher risk, right? But that's why we have the rules that we have, right? That's why we have all the rules. That's why I preach the rules constantly. And we have nothing to worry about. Even with taking a loss like this, we have nothing to worry about. Because now we kick back and reflect what happened. So price dug lower. The S&T at these lows held up. Our assumption that price was going to drop lower to then continue to manipulate and get down below these lows. Unfortunately, that did not happen in this case. It did everything that we wanted to see in regards to that being the case. DXY rallied, the high was taken, that we shifted market structure here, came back, and you see what I mean? How when I was describing the fact that it was just sitting there and not taking off at all, how it was taking so long, right? Because it took so long, it lowers the probability of it delivering. It should deliver quick, one-sided, especially going into a macro, which we did come into, right? I wanted, obviously, to see this macro deliver up into this and drop to give us a deeper manipulation to the downside, but it chose not to do that. But you know what it did do? It still gives me a little bit of confidence that it's probably, still interested in getting down here at some point. It left equal lows here. Not only that, it left these equal lows here. So look at all the layered liquidity. Right, we got equal lows here, and then we got the higher 15-minute equal lows here that we outlined as also a market maker sell model earlier on the 15-minute. Right, then we got, again, our 5-minute possible market maker sell model, which now looks really sloppy because of this. But yeah, right, Let's see how this fair value gap acts on the DXY. So yeah, DXY has turned from there. So let's see what happens. So we've ran sell side here. Now we have an inversion fair value gap. So let's see how that responds. I think these down candles here, maybe I think that presented an order block now. Created a massive order block. Very, very big one. Also, I mean, I guess you could make the argument that, you know, this kind of made a breaker, bullish breaker. But the fact that this wick was so massive doesn't make me really like it. Yeah, it's not a very clean breaker. You could still observe from this low to this high, drag that over, observe, let's just study how that's going to deliver in price. So yeah, again, we have that big order block that I pointed out. And I mean, looking at this too, like that looks pretty insane, right? That's a huge wick. You see what the S&P is doing. Yeah, the S&P is just, you know, not really doing much. It rallied up. It's been very aggressive to the upside. Now, if the S&P breaks down below these lows here, I'm very much interested in price doing what we talked about, going lower, to then eventually set up price going higher. Yeah, if this low doesn't break, then it's going to continue, in my opinion, to go higher, especially if the DXY continues to tank. Let's go observe this. So again, we got these equal lows here. The yields have rallied up, right? Kind of just, you know, wicked up, took out this, or you notice how it hit the midpoint of this wick here? I speak about this a lot too. When price is delivering to a particular level or area, or drawing liquidity or whatever, and you're observing institutional order flow, a very common signature if we're bearish, up wicks, the midpoints of them will be respected, right? So that's a good sign if we're thinking that the yields are going to continue going lower. And it's the same with these, right? The down wicks become significant, and the midpoint should act as support, while if we're bearish, up wicks should act, it should use the midpoint as a premium array, right? So down wicks in a bullish trend should act like the midpoint should act as a discount array. Up wicks, the midpoint of those in a bearish trend should act as a premium array. Right, so let's see what happens. Say that was just vicious. I mean, this is typical for NASDAQ, right? NASDAQ always does some wild ass shit like this, right? And that, for a new trader, can be extremely demoralizing, right? It could be shattering in many cases, but that's why you should start with the S&P first until you're ready to ride this horse, right? Because it's a savage. Everything could look like it's going to work out, and then it just turns around on you, right? It does it, and then it, you know, could go right back in your direction, just because NASDAQ is the NASDAQ, right? So yeah, look at the Dow, right? The Dow looks like it is possibly favoring switching. So this low and that high, once it breaks through this low, if we're gonna see this as a reversal, potentially, right? If that was stacked as a reversal, we wouldn't want to see this range. Technically, this is an order block, a bearish order block. We wouldn't want to see the midpoint taken out. If it stays below that, then obviously that's signature for us to go and trust lower price delivery. We have equal lows here. All right, let's see what happens. So remember, we're at daily highs up here. So now if, in my opinion, if we break through this low here, we may finally get to see ourselves go lower. Notice how it peaked up above the high here. Daily, the previous high is above these highs here. It swept up above it, declined, ran through it again, and then declined, and then ran through it one more time. Now, I definitely feel like if we are going to go lower, it's going to go lower from here. There's no reason for it to go back up there. And if it does, then any interest for sell side would be disregarded for me for the day. Right? Morning, Maddie. Welcome, brother. Appreciate you hopping on as always. But yeah, as we've been describing the whole day, we're looking for this to possibly retrace to then set up bullishness. So that's kind of what we're looking for here to try to justify that. We're looking for a price to potentially use this liquidity to pair their potential smart money buys to get them back in line with logical liquidity. But we'll see if that takes place. It doesn't have to take place, obviously. And right, if price doesn't get below this low and we just continue to rage higher. We've also had SMT at the lows, so that was significant, right? So if things don't start hinting towards the fact the price is going to have interest to go lower, it seems right now that it's just not ready to do so. It's not ready to kick in line with what we've tried to discuss or what we've tried to see in price, which means we don't take a trade, right? I had a feeling that this could happen. So like I said, it was a hypothetical study scenario. And then what do you know? Price broke through the highs. And then now it's kind of stalled out at equilibrium, right from this high to that low. Do you put much weight on key times, midnight? Yes, of course, Maddie. Of course. That's the key times, open price, midnight, those things, those are open prices. And do you know what the significance is behind those times? Like, why are they even considered? See, now this is interesting. This makes me feel like it's going to then kick back in line with what we've been trying to see the whole morning. Now this becomes a large breaker. No, so those are reference points for power of 3 dynamics and navigating the manipulation in price delivery, right? So best sells come from above the midnight open. If we're bearish, the best buys come from below the midnight open. That's on the weekly perspective. The best buys come from below the Sunday's open for the weekly range. That is another reference point for the weekly range power 3, but the midnight open is for the daily range power 3. So the best buys on a weekly perspective will come below the weekly open, which is Sunday's open, and the best sells come from above the weekly open, preferably on a Tuesday or Wednesday. And then inside the daily ranges for power 3, the best buys come from below the midnight open, and the best sells come from above the midnight open. And you can interchangeably use the open price for the New York session, which 6:30. You can interchangeably use that with the power 3 dynamic as well. Same rules apply. But I mean, you could use those regardless, in line with the midnight open. But a lot of times you can also use the open price, the New York open price, as a secondary power 3 reference if the midnight open is too far away from price. See, I hope that makes sense. Yeah, so this morning has been a whole lot of sloppiness. So, in my opinion, it's not worth pushing anything, okay? So do not have any hardline assumptions. You can just see, you want to consider all the things we've discussed, obviously, because it's all relative. But as far as what we see in price delivery currently, we need to be very cautious. Because it doesn't seem like it is going to do anything rational so far. That may change, it may not. I'm assuming it's not going to change. And why do I assume that? Because there's a news event coming soon, CPI. So they're going to do their best to build up as much sentiment on both sides as possible just to try to victimize everybody. So don't become a victim. You're aware of the enemy. You're aware of what they will likely try to do. You're aware of the conditions in which that enemy is going to have you think you should operate in. And you know better. You know, you're not taking a ghillie suit into the desert, right? One that's for a forest, right? You're not going to do things that are unnecessary, right? You're going to wait till the conditions are ripe and ready for you to then get that headshot. Yeah, if you notice, we could see the SMT at the lows. But again, I prefer my narrative that we've painted this morning to come to fruition. I prefer to see the sell side trendline liquidity get taken. Mind you, I'm not claiming that the higher time frame bias is now bearish, right? Or the narrative is bearish. I'm trying to look for a better position to position myself for the actual buy side delivery, because that's what I want to see. That's what I prefer to see, and that's what I trust more than looking to favor sells over everything, right? Because sells right now are counter trend, and you can see the difficulty in someone that would be trying to sell, right? It'd be a very arduous task for someone to try to sell at this moment. Just look, right? Even if you were looking to buy, look what they're doing, right? Created a low, maybe you bought here, came all the way back on you, took them out. If you look to sell, maybe you look to sell in here, like our hypothetical from earlier, you get stopped out, right? Just think about what they're doing. They're trying to damage the hell out of everybody and make everybody pissed off, make everybody destroy their accounts. And again, we were prepared for this. We mentioned this stuff. We talked about it, right? So it's not like anyone was not aware, right? So now next time when you have you and yourself faced with some of these news events and a similar condition, you're going to hopefully remember some of the dialogue we've had this morning. You're going to remember the importance of the rules. You're going to remember the hypothetical that we did, and you understand the manipulation that it's done, stopping both sides out. We're in seek and destroy profile as well. So that is automatically Low probability, right? When there's these news events that are ahead of us, or when there's no news at all, especially on a week that has these news events ahead of them, automatically low probability. Again, low probability doesn't mean that something won't happen. It's just low probability that you are going to be able to gauge what's going on. And it's low probability that you're going to get a trade that I'm sure everybody goes into the market looking for, which is one that takes off and runs up the profit, right? It's low probability that that type of idea or delivery in price or characteristics in price will take place when you have low probability conditions, right? Again, we do have a lot of stuff justifying the bullishness, the higher time frame bullishness, from COT seasonality, like we've discussed in a previous video. Then, of course, we still see the overall structure is still intact in terms of bullishness. We see how the DXY is also confirming that, right? But again, the whole framework, condition-wise, what we were trying to operate within was we wanted to see if price could come, take out, and manipulate price below the Sunday's open price to then come and take out some of the sell side here and reach down for fair value gap, right? Because that didn't happen, I am uninterested in trying to chase price. I'm uninterested. And now that you take a 30,000 foot overview and look at what price looks like, I mean, you're probably glad that you didn't take a trade. If you did take a trade, you got to listen, right? That's not the end of the world, right? But yeah. See, let's see what happens at this order block right here. Let's see what happens. With the DXY, the yields. Again, everything's showing like it wants to favor price going lower for the DXY and higher for the indices. And again, that's in line with the overall narrative painted on the higher time frame. It's just disregarding the ability to reach down for the fair value gap. That right there shows, if that is the case, that shows extreme bullishness, which I have no clue why, besides the fact that our companies in this country are pretty phenomenal. The economy, on the other hand, is something very interesting. That kind of makes sense with the DXY tanking. Right, so it is what it is. That relationship is pushing the indices beautifully to the upside. So yeah, watch this order block here. Shift in market structure. Here's a run on stops. Remember what I said about continuation variation? Run on stops. Shift in market structure. Again, I don't trust that it's just going to continue pressing higher because of the way that weekly ranges deliver or daily ranges deliver, right? So yeah, if you take from this high to that low, equilibrium is somewhere in the middle. If the longer we sit around equilibrium in a price, in a dealing range, the longer we will be consolidating, or the longer it'll be much harder to gauge, essentially. Yeah, I have said a whole lot in this call, so I just want to check on you guys. Do you have any questions? We talked about the open prices, talked about the overall possibility of what we think is going to happen. We talked about the conditions. We talked about high probability, low probability. We talked about Friday's high and Friday's low, how you can reasonably use that as a near-term liquidity pool when you start the week going into Sunday and Monday. Kind of pointed out a little bit of SMT, crazy like a fox, shouted that out. Talking about higher time frame to lower time frame analysis. Talk about market maker buy and sell models from the higher time frame to lower time frame. Talked about manipulation in the weekly range. Talked about weekly range characteristics, daily range characteristics. Yeah, guys, do you have any questions about any of these things? Considering the fact that, price is just chopping around. We got some time to just talk about questions real quick. Right. Again, this is just kind of showing evidence here that the continuation variation is something you never want to discount. Because if it was to hypothetically run higher, which a lot of times it does in this type of scenario, there's a run on stops, shift in market structure, little baby fair value gap. If you were to enter in something like this, your stop would go below the low here that created the fair value gap, but then you would write it up to the high here, right? Again, I'm not saying take that trade because we are in low probability conditions. We are in a time where it's just very undecided. What open price do you use? Let me see. Shoot, I can't fully read it because there's something in the way. Open price you use when the midnight price is too far away again. You use the 6:30 open price. You want to know where the 5:30 and where the 6:30 open is at all times. Okay, you want to make sure that you understand where those are at, because if it's too far away, like it's just aggressively pushed away in London, you can then use the New York Open, 6:30. Right? But then again, you also want to consider too, if London takes off aggressively and pushes away from the open price, it may come back. It may retrace and get close to it. But you also want to pay attention to how London delivered, right? Because if it shows like London literally created the power of three dynamic going lower, and if there's a PD array that's like below price that hasn't been met, and we're going into New York session, just think about price pulling back a little bit, using that 6:30 open price, if that's the scenario, to then continue using the New York session as a continuation to then reach for that higher time frame PD array or liquidity point that wasn't fully achieved in London. Because remember, in the daily range using power of 3, London creates the high of the week or the high of the day, and then New York generally creates continuation if a higher time frame PD array has not been met. Sometimes if we're running into a PD array going into New York session, sometimes that's when a reversal can happen. Same with if Thursday and Friday, right? If price has been accelerating for the weekly range, Thursday, Friday, if we hit that, depending on which day, Thursday or Friday, that'll determine whether one of those 2 days, whether it's Thursday or Friday, creates the Thursday or Friday reversal, right? So, and you use that same logic going into the daily range, right? If we haven't fulfilled a PD array going into New York session, but London was quickly moving, say bullish, then the New York session will likely continue to that liquidity pool above price using New York session as a continuation of what London did. Does that make sense? I hope that made sense. That's just kind of part of the daily, weekly range dynamics. I highly recommend you guys, if you haven't, to definitely spend some time with my Power of 3 series. I point out a lot of different things. Beautiful. I'm glad you get it, brother. So yeah, we're just monitoring what price wants to do. Obviously, you can clearly see price hasn't really done much. Like, ask yourself, would you really have wanted to engage in this? When it was over here at the very beginning, when we pointed out that pretty nice looking structure here to enter the sell, other than that, there has been nothing clean and trustworthy. Right? It's just all traps. Right? Trap people above this high. Trap people above this high. Trap people below this low. Trapped them down there. Took them out again. Right? Now we created this high. Trapped them up here as well. Right? So it could, if DXY continues to tank and continue to be in line with the bearish sentiment for the DXY, then obviously we'll see price potentially continue to go higher. Right? Again, bullishness is the overall narrative. Right? Like, that is the overall narrative. The bias I was having for this session, or at least part of the session, was to try to get us down below logical liquidity level, which it kind of failed to do. It got down below this stuff, but that wasn't deep enough. That's like not even barely a discount, given the range that has been created, right? I wanted to see Friday's low get taken, because that would have been amazing, right? See it crash down, or at a minimum, right? At a minimum, this level here. But it seems like this order block is actually going to hold price. But we'll see. We're so due for a retracement. I just felt that, oh yeah, let's push buys right away. I just felt like that's what the crowd's doing. And in my opinion, that's still what it is. And it's likely to still turn around. That's why I'm not saying, oh, let's go guys, let's buy. All right, look what happened. Right as I say that, the freaking thing, it does exactly what I said. Right when I say it. All right, I'm going into 7:30. We're in the silver bullet time window. There's not really been much for silver bullet wise. I mean, unless you wanted to consider this, but majority, 99% of people ain't taking that trade. They're probably scared. And it's just not enough for me to have even taken that trade. Now that we have this run on stops here, shift in market structure here, right? Maybe we could try to spot an order block in here somewhere. A 15-minute, 1 hour. Yeah, there's really not much. We do have this fair value gap in here, though. We got this. Notice how it just took out this low and just came back off of it. This is aggressive. Like, this is heavily manipulated. Look at what it's doing. Taking highs, taking lows. And then when you go to the lower time frame, it looks even more vicious. Right? Again, I'm still of the belief the price is going to drop. In this case, this looks very, very, very pretty. Like, this looks beautiful. But we're kind of stuck in traffic. Or like ICT says, stuck in the mud. Got this fair value gap here. You should probably watch this. See how that responds. Yeah, I appreciate all you guys that have been with me throughout this call. 12 people on for as long as you guys have been on has broken the record so far, right? So I appreciate you guys, lending me your attention and coming to see what I have to say about this stuff. And I hope you guys have been getting value, right? So yeah, watch this fair value gap right here. Got an order block here as well. So let's see if DXY continues to rally. If it does give us a little punch higher, we could have a very short-term delivery to the downside from here using the what is that, silver bullet? see what happens. See what happens. Excuse me. Yeah, this looks pretty nice. We'll see if that's short-lived or not. Yeah, I feel like this is going to be a hopefully a pretty good thing to watch go lower. Again, I want to see it set up the scenario for us that we painted for basically price going lower, seeking out the stops to then set us up for buys. Anything that has to do with this scenario, it's seeming a little sketch, especially because look at price. We're now range bound. It's right back to equilibrium. It's just not very fruitful today. But again, that's like we said at the very beginning, that's to be expected. Very much to be expected for this week to be much harder. There will be opportunities, but there's also going to be opportunities for you to blow your account. Right? So don't do that. Don't be reckless. Don't put yourself in positions that you don't need to put yourself in. And just like that, price comes all the way back. See, there's a crack. Not only that, there's a crack in correlation, right? NASDAQ's rallying. The Dow's falling. Everything is discombobulated. It's disjointed. So what does that mean? That means that you need to be very cautious. Because imagine if you took a bunch of losses in here, you reflecting an hour later while you look at price, you just think, damn, I just shouldn't have even taken a trade. Like if I wouldn't have taken a trade, I wouldn't have blown my account. Or if I didn't take a trade, knowing that this was kind of sloppy and knowing that Christian said, oh, it's going to be low probability, if only I would have listened. Right? I trade both ES and NQ depending on which I feel is the best opportunity in the moment. There's a couple factors that go into which one I decide. That could be S&T, like if I'm looking to sell, if the NASDAQ creates the lower high and the S&P makes a higher high, and we have a bias that's bearish, I'm looking to sell the one that makes a lower high. Or vice versa, if we're bullish and one makes a failure swing lower, like a higher low, but one makes a lower low, if I'm bullish, I want to take the one that is creating the higher low, the failure swing lower, because that's underlying strength. And then the one that makes the lower high in SMT bearish, that's the one that's showing underlying weakness. Does that make sense? I use AMP and Tradeovate through TopStep. Mainly AMP futures in America. I think AMP futures has also some stuff that you can do outside of America. I believe so. It's like AMP Global or something like that. I don't. Well, I've never had problems with them, right? That's not to say you won't have problems with them, right? I know some people that have had issues. I personally have had no issues, right? So just keep that into consideration, because I don't want to recommend something and then, maybe you have a problem. There's always going to be problems with brokers, constantly. There's always going to be issues. It just depends on what works for you. And I like trading on TradingView. I've heard of another one that's kind of cool too. Where is it at? Iron Beam. I've heard some people use Iron Beam. They're pretty cool. But I mean, you could see the difference in reviews, right? AMP is it's very basic. It doesn't really have a dashboard. So you have to do what I've done for me and my students. Create a journal. I created one for my students that kind of shadows what, kind of like what a funded account shows, but then it's also showing kind of what TradeZella does. It's got a calendar. It's got all kinds of stuff. So definitely consider doing that. Like maybe getting one of those, or right if you become part of the community as a lifetime member, you get that as a perk, I guess, right? But yeah, that's up to you guys, right? But yeah, I definitely don't want to be the person that recommends a broker. But I personally use AMP, and through TopStep, you're able to use Tradeovate. Right? So it's all up to you to make that decision. So I've heard, of course, we can't escape Webull, right? The freaking ads are like a virus, constantly popping up. I've never used them. I know that things like Robinhood, Webull, all those different things, at least from my experience and some of the higher level traders that I've been in contact with for the last couple of years, those are for like basic or like just starting type of traders, because it's very easy to use. I mean, they're probably good. I think they do offer options. I'm not entirely sure if they offer futures. I'm not sure. I've never used them. I've heard good things about them though, but I've found what I wanted to use for the last 3.5 years, and then basically just rock with that. Right, I've been trading for 4.5 years at this point, so it's kind of like, yeah, I've been through a lot of brokers, but three-ish years ago, I stumbled across AMP because I heard ICT using them, and then I found out that AMP also offers like a retirement account, like a Roth IRA, and that's tax deferred. This isn't tax advice. This isn't financial advice. It's just my opinion. But it's preferred or really recommended to, if you're going to be a full-time trader, or if you're looking to trade and keep most of your money, because taxes are a bit rough, especially if this administration that we have in the United States stays, because they are very tax-heavy handed, right? It's definitely recommended to use or day trade in a retirement tax-deferred account, which is like a Roth IRA, a regular IRA, so on and so forth. Again, this isn't financial advice, but that's just a strategy that I've learned over time, and it works for me. It works for majority of people. Most of these big-time trading or big-time traders that understand what the hell they're doing, for the most part, are generally using a tax-deferred vehicle like an IRA. But like if you have a large sum of money to throw in, like 50,000, 100,000, even 10, 20,000, sometimes it's a good choice to have a regular broker account. Just know that it's very complicated with taxes. You have to know every single entry you take, every single entry point, the profits, the fees, when you took the trade, what time you took the trade, right? You have to document all that stuff, because when you give it to a tax professional, they're going to ask for it. Yeah, I've been trading full time for 2.5 years. So yeah, 2.5 straight years doing this. Not only doing this on YouTube, but I've been doing this in front of people for, man, pretty much a little bit longer than that. Probably almost 3 years. Yeah, and the people that are actually trying to be traders, and especially when they do start trading full time, they end up knowing this information. And most people don't know this information because guess what? Most people haven't reached that level. They're not able to even look at things in that perspective, because it's just not part of their idea, because they're not paying taxes, right? They're not paying taxes on their trading. So of course they don't know. So that's a key indicator. If they're not paying taxes or know any information about their taxes in terms of trading and what it requires, they're clearly not profitable. Because if you have no clue what you're doing in terms of taxes, or you've never even looked at it, you're either going to get in a ton of trouble and have a massive tax bill like in the next couple of years, or they're just not profitable. And generally, it's the fact that they're not profitable. So they've never even thought of talking to a CPA. They've never even stumbled across the knowledge that they have to pay taxes, right, on their trading, and how complicated it is. I've had 2 CPAs. One was a freaking disaster, and last year and this year I've had a pretty nice CPA. RE Investment Broker. Are you are you like a trader? Do you own a brokerage? Like, how long have you been trading, if you don't mind me asking? Yeah, it seems the S&P has been the better mover. That opportunity that was here was also presented here, and that one on the S&P obviously offered a pretty nice move. A lot of the time, things are going to be like this. If you're comparing the NASDAQ and the S&P, most of the time this is going to occur. NASDAQ's going to be the more reckless, vicious, but maybe eventually having a larger move. But the S&P will be the more held back, less insane type of delivery. Oh, nice. You started during COVID? Yeah, that's what most people ended up doing. Most people started with that. Kind of forced you to try to get creative and figure out, what's available. All right, see, so now things have delivered outside of a macro, right? Things have been a little harder to read this morning, obviously, but it seems as though things have pushed away into the logic we've been waiting for it to engage in. Let me see. Yep, exactly, Byron. A freaking narrative beautifully delivered. Although NASDAQ kind of shook, did a little shake and bake, shook out everybody. Would have also resulted in me taking a loss. But that's why we have rules, right? Beautiful. Byron in the chat right now has been with me from the very beginning. I'm just super grateful that we have stuck together, not lost contact. Yeah, that shake and bake was no joke, bro. It was like Steph Curry. Oh my god. But here to get away from traditional concepts and learn ICT. It's way over my head, but yeah, bro, remain hopeful. I am very grateful that you have come and are spending time with me, and just lending me your ear, because there's a lot of like ICT says, there's a lot of mines. It's like a minefield in the ground, right? When you're walking through the landscape trying to be a trader in this industry, and you have to know exactly where to step, otherwise you're going to get blown up, quite literally, right? And there's so many mistakes, so many ways of thinking that you're not even aware of, that you're going to have to eventually be aware of. And I make sure that the vibe here is very realistic, right? I make sure that everybody, if they're spending time with me, they better not overtrade, because I'm not doing that. I'm not ever saying to do that. If something is a hypothetical trade, generally it's just that, because of the conditions like today. When things are high probability, we know. When things are low probability, we know, and we know why. We're not just saying, hey, it's high probability, it's going to go higher, and then make you figure it out. It's very laid out. The process is laid out. How we determine bias is laid out. Everything's realistic, and it goes against most of, like you said, traditional trading concepts. Although, there's people that make money off of trading traditional concepts, but generally that has to do with them managing risk properly. It has nothing to do with the overall strategy, for the most part, right? And then there's some that are more dynamic than others using traditional concepts, but for the most part, it's a lot easier. Well, I wouldn't say easier, but it's a lot more clear, and you get clarity when you learn how to master ICT concepts, because that's the whole key. And that's why I do these calls, is to build clarity, right? It's because once you have clarity, you're one step closer to putting yourself in a position to maybe be profitable. And I say maybe be profitable because no educator is going to make you profitable, because they're not pushing the button. They're not managing the trade for you. Eventually you will have the person in the mirror that you're going to have to learn how to trust. You're going to have different things to get you in alignment with where price is going, and you're going to have clarity on that, so then you have validation and validation principles, so you understand that you can trust the things you put your money behind, right? And it's a process. It takes time. There's a lot of growing pains. But being around communities like the one we're trying to build here, both here on YouTube and in my private community, there's no fluff. There's no false dreams. There's no, I need to get 100 points every day, or you're not a good trader type of vibes. You can simply get 5 or 10 points. Shoot, almost every live session besides this one and maybe one other one since I've started going live on YouTube have had opportunities that ran directly to our target. I've shared the fact that the accounts are live. That's most of the ideas, pretty much 99% of the ideas that are shared are generally because there's a good reason behind them, right? I've showed entries, so you can know that I'm doing exactly what I'm preaching to you guys, right? That there's buttons being pushed, and when there's times not to engage, it's very much highlighted. Like today, I said specifically that day was low probability, right? Byron in the chat, my freaking brother, right? He's got nerves of steel. He's got experience. So and most importantly, he's an independent thinker. And that's a huge main priority of mine when I'm here, like talking to everybody or even giving my opinion. You still got to be very, very independent. And the only way you can become independent goes back to what I was saying a minute ago. You have to have clarity. Or you have to have an understanding of what it is you're doing and why, when things are going to be invalid, so you know not to push too much. And you got to have rules, which, we talk about it all the time, every day, every time I go live. Rules are always mentioned. The importance of discipline is always mentioned, and it may eventually start getting annoying, right? But guess what? You know what else is annoying? Blowing your account all the time, wasting money, right? And you're gonna still lose, yes. But what determines longevity in this market, in industry, in these markets, is how you're able to manage those times, right? So yeah, bro, I appreciate you spending time with me, brother. Getting away from traditional concepts, I feel like is a very good thing for you to do. For some people, it's going to be more hard, going to be more difficult, but at the same time, it's well worth doing. Getting away. Don't forget about those traditional concepts, because eventually you'll use them against them, right? And you'll see when they'll fail when you understand the dynamics behind how price actually delivers and why, which is what you'll learn here, what you'll learn with ICT, and real life application and clarity is what I offer here in this community. No worries, brother. I appreciate your following, and you're welcome, brother. We all just heed yours and ICT's advice. Story of my life. When will we all just heed your and ICT's advice? Honestly, brother, I don't know. I don't know. Yeah, Byron, we got days to go. We still got so many more levels to smash through. We got the journey never ends as a trader. There's no I arrived, right? Besides the fact that you have clarity. That's why that word is thrown around all the time, because it's, that's the focus. But yeah, there's levels. Once you hit another level, once you make, 1,000, or once you make $20, now you got to make $50. Once you make 50, you got to make 100. Once you make 100, maybe you get stuck, right? Maybe you lose that 100. Then you got to make it back. Then once you break through that and you make 500, now you got 1,000 to make, and it just never stops. When you hit 100,000, now you're going to try to make 200,000, right? And it just goes on and on and on and on. But that's why you got to have reasonable goals and set a purpose behind the profits you make eventually. It's more of a down the line type of conversation. But yeah, having weekly goals, daily goals, at least a target to hit. If you don't make goals, if you don't set goals, you'll never hit anything. And that'll be replaced by taking losses, because you have no limit, no target, no stopping point, right? And then it just becomes stressful, and then it invites negativity. Oh, I didn't hit 100,000 today. Oh, I didn't hit 100 today. Oh, I didn't pass my challenge today, right? And you're not thinking like, am I learning, right? Do I understand what the hell I'm doing? Yeah, it's just gambling. That's all it is. It's just like, I want the thrill of pushing the button and maybe making some money. We're not trying to maybe do things. We're trying to have high probability that something good will happen. And then once you're on that side of the fence, the world becomes a much different place. Yeah, so if we go back to what I was saying earlier about how I would like to see a market maker sell model perform, it looks like we are now possibly kicking into that perspective. Right, so the YouTube model performed here, like I pointed out. The NASDAQ was vicious. It didn't allow for anything. Like I said about the wicks, the down wicks, if you measure out the midpoint, that should act as a premium array if we are in fact going to continue going lower, to then target down here. Right, these equal lows are beautiful. I'm assuming that this is going to respect the midpoint of this wick and then potentially send us where where we've been trying to get to, right? To seek that sell side liquidity. Remember, all this conversation, it's very easy after all these types of conversations and all this analysis to forget what we talked about at the very beginning. Where has all this stuff stemmed from, right? What is the higher time frame doing? Because it's great to see what these lower time frame charts are doing, but what is all that doing while it's creating that daily candle, while it's working inside that weekly range, while it's working inside the daily range, which is from this red line up into the PM session, right? So this whole day has been manipulation, right? Ran higher, prices now dropped. I would like to see the fact that this got taken, this Friday's high. I would like to see us go lower to take this out. Then I would be much more confident to be able to get in line with something bullish. And in my opinion, that sets you up for an even stronger move to the buy side. Because then that's taking out sell side liquidity that's important, and then positioning smart money potentially to go higher from a liquidity level that was engaged. Because that's what they do. They work in liquidity. That's why the understanding of what price does inside these daily, weekly ranges and the manipulation that takes place and the characteristics of each day inside the weekly range, that's why those things are so important, because it helps you narrow down the logic behind a particular narrative on the higher time frame. Because all these candles on the lower time frame, you have to remember they're the details that are creating the higher time frame candles. So it's significant to know how that all works. And obviously that takes some time. You know, it's not just, oh, let me find a model and I'm good. No, there's a process to gaining clarity. You know, there's a process to learning price navigation and higher time frame to lower time frame analysis. You know, it's not just, oh, I found the YouTube model, right? Or, oh, I found a breaker. Oh, I found a market maker, whatever model, right? That's like the least important is the entry model. What leads to the high probability delivery of that entry model is what's important. Determining where price is gonna go in the higher time frame and why, that is important. That's the most important stuff. Aside from, of course, risk management, and being organized, right? So yeah, well, let's tape read what price does from this wick here. See how GBP and the euro has continued to race higher. We see how not much has happened within the bonds and yields. They've kind of stalled out. Remember what I've said in the last couple weeks, right? When you see the bonds and yields not doing much, generally that's going to lead to reverberations going through these other markets, right? It's going to make the indices have a little harder time. In this case, it made the NASDAQ more impacted in terms of, you know, making things a little more difficult, right? If we focused on the S&P, reason I didn't focus on the S&P was because it seemed like the weaker asset was going to be the NASDAQ because of the SMT that was pointed out earlier. But then again, that ended up getting taken out, right? And then it turned into the S&P delivering more cleanly to the downside, right? And that's a missed opportunity, right? The hypothetical NASDAQ entry looked beautiful in the moment, right? Which was right here. We tried to take this. We looked at this as a possible breaker, right? We looked at this as a also possible YouTube model rules. What I forgot to mention also was the fact that if this was a breaker, right, it should not have even reached into this upper fair value gap. So if you're looking for the YouTube model and the breaker, if you see something like this, if there is a breaker and that breaker is going to hold, it most likely will hold within that lower half of the breaker and it won't look to have a lot of interest to get up into here. It kind of showed that to start off in here, but then of course price at 650, the macro pressed on through one more time to stop these people out, right? Which would have included ourselves, right? If we looked to try to engage that. But given the low probability nature, it was just hypothetical, right? So when price got above there, it ended up shifting market structure here again, but came all the way back again to stop people out, right? So people would have got stopped out there as well, right? And then price, tried one more time, failed, left equal lows, retraced one more time. This is at the same time where the S&P was offering a pretty beautiful entry, but then they kind of followed suit and did pretty much the same thing. All of this is working inside of the narrative that we were, or the bias that we were painting out, which has to do with us creating this as a market maker sell model to try to get down below these relative equal lows to eventually set us up with a possible bullish scenario because of the higher time frame narrative, right? Narrative and bias, for those of you that don't know, there is a difference. See, let's see how this candle is used. Let's see, is this going to be respected? We got tons of wicks in here, so it's delivering both sides of the market during these time periods. So it's making it more high resistance to get us through there. So again, in my opinion, I think we should be good to reach down below these lows and use this as a breaker. So that's another hypothetical entry. Again, all within the narrative of us possibly seeing this retrace. I hope all that stuff makes sense, you guys. If y'all got any questions, let me know in the chat. Yeah, we'll probably, I think it's already been almost 3 hours. So yeah, we'll probably hop off around 8 o'clock. Right, so we're in the 750 macro right now, so I wouldn't be surprised also if we end up getting a quick energetic run down below to our target. We see DXY giving a retracement. Right, it's pulling back. Remember what I painted on the daily time frame here, or the 2-day time frame on the DXY very early on. I said I'd like to see the indices possibly retrace. And then I'd also, in the same vein, want to see DXY promote that by retracing as well. And then obviously, to amplify that even further, we'd like to see the yields go higher and retrace, maybe to this fair value gap above this high. And then see this possibly retrace as well a little bit before it wants to, choose to want to run higher. See, and again, this here was painted as a possible market maker sell model. So we'll see if that wants to fully come to fruition. I will be off the charts by that time. But again, we're in the 550 macro. Remember what I pointed out right here, this wick. If we respect the midpoint, we should be justified to continue going lower. And obviously, things have worked out so far. I mean, we even have this target down here before we get to the other one. Down here, we have these equal lows as well that could get targeted. But we'll see. Let's go look at the lows, see if there's any SMT. So there is equal lows here, and there is SMT at the highs. So that's kind of supporting the notion that price is potentially going to continue to seek more sell side. But again, this is all working within an assumed higher time frame bullish narrative. So it doesn't even have to go all the way down there. That's just what I prefer. Why would I prefer that? Because I like to see decent levels of liquidity taken. I don't like seeing just, lethargic, small, single lows. Like, I like to see relatively significant manipulation when it comes to the weekly range observations, as well as liquidity positioning to get back in line with the higher time frame narrative. All right, so see what happens. Shall see what happens. But yeah, guys, I think I'm gonna call it a day. All right, we've been on for 2 hours and 44 minutes. We did have a good amount of things to look at. We did have a hypothetical that would have ended in a loss. It's been a low probability day. Seems like the retracement that we did anticipate at first has come to fruition. We did want to see a little bit more of a significant reaction to that. NASDAQ was vicious and pretty much untradeable, right? So I'm happy that you thought this was dope, Maddie. Appreciate you as always for hopping on. We'll be live again this week. I'll probably do one more live. Probably do, I might do 2 more lives actually. Probably do one on Wednesday and then one on Friday after the aftermath of CPI. So definitely try to remember that. I'll probably throw it on the schedule so it'll be pending. So maybe you guys can set an alarm. Yeah, no worries, brother. You have a good day too. Just keep showing up, brother. Keep showing up, and clarity is much closer than you think. And then how you apply that clarity and how you follow your rules and continue to develop will determine whether profitability is something that comes quick or takes a little bit more time, right? So yeah, NASDAQ looks kind of interesting right now too. Look, ran up above this high. See what happens with that. DXY is declining. Right, remember, we're still in a bullish narrative, right? So this running higher and just refusing to get down lower, all that shows is that we are heavily bullish, right? So yeah, watch that. That looks like a pretty beautiful entry model right there. Run on stops, shift in market structure, fair value gap. So that was a opportunity, of course, right when we're about to leave. I mean, it makes sense though, because the 750 to 810 macro, we're inside of that. So just another amplification of how important the macros are. All right. So with that being said, thank you guys once again for hopping on, and I hope you have a good day, and I will see y'all on Wednesday.